Thank you very much, Tina. Here we are today with CoinScrum Markets, another session with all things regulatory. Today's session is titled The Unintended Consequences of MiCA for DeFi. Today I'm joined by Marc Taverner, the CEO of INATBA. Welcome, Marc.
Thanks, Ian. Hi.
And also Arnab Naskar, co-founder of Stokr and also at INATBA.
Hi, Ian.
Hi. Hello, guys. Firstly, let me just set the scene here, and then we'll go for some brief introductions. INATBA is the International Association for Trusted Blockchain Applications. It's a leading convener in the global blockchain ecosystem, offering developers, companies, and users of blockchain distributed ledger technology a forum to interact with the regulators and policymakers, bringing the technology to the next phase. Most recently, INATBA has launched a MiCA task force in response to the European Commission's proposed regulation, Markets in Crypto Assets, the so-called MiCA regulation. This is going to definitively change the landscape for crypto service providers and crypto assets in Europe and beyond. INATBA's initial analysis of the regulation indicated that MiCA is detailed, comprehensive, and extremely broad in its coverage. The proposed regulation leaves few, if any, areas of the market untouched. It permits very few exceptions and intended to be highly prescriptive and directional for both industry participants and member states. Moreover, because MiCA is both far-reaching and exceptionally detailed, it places an urgent requirement on all market participants to invest significant time to understand this regulation and the ways that it would interact with the varying member states and the current laws that exist right now. INATBA anticipates this will create significant disruption as all ecosystem participants scramble to understand, process, and operationalize this vast interwoven set of regulatory and compliance proposals. Okay, well, let's introduce Marc. You want to give a brief introduction who you are and what you do?
Yeah, thanks, Ian. And thank you for having us here today. It's a delight to be alongside Arnab, who is a valued member of INATBA and incredibly well-versed in all things relating to digital assets, investment strategies, and very many other matters as well, too many for me to go into. So I'm Marc Taverner. I'm the Executive Director of INATBA with the International Association of Trusted Blockchain Applications, and as well as focusing on finance, we focus on 13 other use cases for blockchain applications, distributed ledger technologies. And it is true today, we're talking about finance and MiCA.
Thank you, Marc. And if I could ask Arnab for a brief introduction too.
Thanks, Jan. Thanks, Marc, for the short intro. My name is Arnab Naskar. I am the co-founder of Stokr. Stokr is an investment platform that is helping companies to issue digital securities on the blockchain, as well as helping investors to invest into those digital securities. In specific reference to INATBA, I am also the co-chair of the Finance Working Group. It's one of the largest working group at INATBA right now, and is also dealing with the matters of MiCA, as well as the pilot regime and other financial related aspects of crypto assets. And we are also have created kind of a very elaborate team that is working currently on analysis of different provisions of MiCA as well as the pilot regime. And we would like to actually bring it out for the public in the coming, I would say, months.
Thank you. All right, well, let's get into the detail here. We did cover off a few of the touch points a few weeks ago with Sean Jones of X-Ray Consulting. Today, we're going to focus on the impacts on the decentralized finance arena. So if I could first bring Marc into the discussion and ask you really for a general explanation as to the work that you guys at INATBA have been doing in relation to MiCA and how much of the regulation is general and equivalent to traditional market participants that may fall under, say, MiFID, for example.
Yeah, thanks, Ian. So the work that we've got going on within INATBA is we focus on MiCA and the pilot regime. So I just want to go back 2 paces. The digital finance strategy that was issued by the European Commission and passed from the Commission to Parliament on the 24th of September consisted of the 3 packages, actually. The Digital Operational Resilience, DORA, as it's referred, the Market in Crypto Assets, MiCA, which is what we're going to talk about today, and the pilot regime, which calls for an approach to sandbox, creation of a sandbox environment around the tokenization of security assets. So within the finance work group, we are focusing both on the MiCA and the pilot regime files. And the work that we're doing, and I'll focus just on MiCA for the purposes of today's discussion, the work that we're doing is very exhaustive, as Arnab alluded to. So we've got an internal and an external focus stream of work on MiCA. The internal stream of work is where our members have come together and are analyzing clause by clause the MiCA proposed regulation with a view to submitting evidence into the parliamentary process that will support considerations that we think are for the benefit of the industry. But because this particular proposed regulation is so potentially impactful for our very young industry, we thought it would also be wise to secure the opinion of the wider ecosystem without the encumbrance of INATBA membership standing in the way. So we've also launched an external MiCA task force, which is open for anybody to participate in. And it consists in the first instance of a questionnaire where we're looking to gather evidence and opinions from market players, ecosystem collaborators, adjacent industries, other trade associations, and interested individuals, such that we can fold that evidence into the work that's happening within the INATBA work group, inside of the finance work group, but also that will end up in a report that gets produced into its own right from that public MiCA task force and submitted as evidence as a standalone piece of work that represents the wider voice of the industry. And the reason we're doing this is because we think this moment in time is so significant and yet is massively underappreciated by the vast majority of market participants. And I'm sure we'll come on to the reason for that in a short moment, but we're trying to cover a lot of ground as INATBA, and we're really calling on the wider ecosystem to come with us, to leverage our platform, leverage our proximity to both the European Commission and the Parliament, and to leverage the relationships that we have in place with the Council, which is where the deliberations are currently taking place. And there have already been 2 group discussions around the MiCA file held within the European Parliament. So this is very much a piece of work which is in progress and not something which we should be talking about in the future, because this is in the process of being ratified into regulation as we speak today.
Thank you. And if I may hand over to Arnab, and from your side of the fence, both as a lawyer and a founder, can you give us a sense of your key takeaways and perhaps what jumps out at you the most with regards to this proposed regulation?
Yes, I think Mark rightly highlighted over here that we're in a very crucial time at this point of time, where the European Commission and the entire, I would say, the European legislative processes are really looking into regulating the crypto assets, if I may say so. And the market participants need to be aware, because any kind of law that is passed in this process, for be it MiCA, be it a part of, I would say, the task force, be it a part of the pilot regime, this will have a future impact. And this future impact will be not only for the companies that are operating in Europe and servicing in Europe, but also for the companies that is operating outside Europe and want to access the European market. So it's a very crucial moment. And coming to this, I think I would like to mention 3 key aspects of the MiCA and I would say the connected documents that formed a part of the Europe's digital finance strategy. So there are 2 main documents I think we need to be very much aware of. The first one is the crypto assets regulatory framework, called Regulation on Markets in Crypto Assets. This is, in short, we call it MiCA or MiCA, as you may pronounce. And the second one is the pilot regime for the DLT market infrastructure, which will be used for transacting crypto assets which qualify as, I would say, financial assets under MiFID. That means those crypto assets which are not qualified under MiCA will go over there. And these are 2 different regulatory structures. Now, let's talk about MiCA. One, I would say there are 2 very interesting aspects of the MiCA over here. Is if you are an issuance, I would say, entity for issuing any kind of crypto assets that are not qualified as a financial asset, if you're an issuer, if you're a service provider, if you are an exchanges that is helping into those digital assets exchange, you will be falling under this MiCA regulation. That's the baseline statement. In terms of, I would say, structurally, if you are providing support services for crypto assets like security tokens, if I say so, those crypto assets which are qualified as transferable securities or financial instruments, in that case, how it will be traded, or how the secondary market will be performed, it's kind of a European level sandbox you can think of what the DLT pilot regime is proposing, and that comes under that perspective. This, I would say, the MiCA is very wider ambit. I would say, like, it's a very elaborate framework or regulation, I would say. And the European Commission has taken a lot of effort to develop it. But also we need to understand the aim in which the MiCA was drafted, and after the consultation they did in March 2020, and how the process moved. Somewhere you can see the MiCA went far beyond its major outreach and tried to cover a lot of aspects which it didn't intended. And now in that sense, the market participant need to come up and say what specific provision does not make sense in MiCA, maybe covered at a later point of time, or maybe elaborated and maybe clarified it later. As a third part, I would like to say some specific provision which the market need to be aware of. The first one is, if you are issuing a digital asset, which are crypto assets in this case, you need to have a legal entity. And that's a very crucial aspect. You cannot have it without a legal entity. Now, how crypto assets like Bitcoin can perform, these are still, I would say, not clear from MiCA, need to be answered, but a legal entity is an ideal. So whether it is DAO or something, there are a lot of questions will come, which we are not yet in a situation to answer. The second aspect is, if you are dealing with a privacy coin. The privacy coin is specifically somehow restricted under the current MiCA regime. So if you are a privacy coin, you may not be able to get it listed on a security exchange or on a crypto exchange that is trading digital assets. Let's put it like this. MiCA also aimed to regulate e-money and asset reference token. Now, this is a very confusing terms, like what is e-money and what is asset reference token. There's still no clarification, to be honest, but if you in simple sense, you can understand, they try to cover the stable coins under these two definitions. That is e-money and stable asset reference token. So that's in short, I would say, which are the key provisions that you think, but there are definitely a lot of other provisions because it's a huge documentation, and we can go as we speak forward on this.
Thank you. And the general feeling that we hear at CryptoUK is that startups and challenger financial institutions see regulations as favouring the incumbents and perhaps stifling innovation. On the flip side, as I think Arnab mentioned, many regulators have set up innovation arms, so-called sandboxes, to help foster innovation. But arguably, some of the real innovation going on in the industry falls under the banner of DeFi, where many assume they remain unaffected, often under the assumption that they're doing isn't a regulated, what they're doing is not a regulated activity. So if I could perhaps bring Marc in here and ask from the broad perspective of DeFi, or indeed those folks developing entirely new base level protocols, could you perhaps explain where and how MiCA has potential to impact such projects?
Yeah, and thanks for the question. This is a critical focus for INATBA. Because it goes to the very heart of decentralized applications, which is the very essence of the technology, which is blockchain and DLT, in that these are the applications that can be built, facilitated by blockchain and DLT, that create value, that advance different business models or support different business models, and mechanize trust and provide transparency. So it is true that as we look at MiCA and its current draft, then decentralized projects, which include DeFi, and in the world of finance, DeFi has grown to be pretty significant at the moment. Under MiCA, which requires an operator, a service provider, or an issuer to have a legal entity registered within the EEA. The EEA is a group of 30 countries that include the 27 members of the European Union, but also brings into play Iceland, Liechtenstein, and Norway. So if you are a decentralized finance project, for example, based in the UK, and you decide that you would like to trade within that group of 30 countries, under the terms of MiCA, you will need to have a registered legal entity within the EEA, within those 30 countries. Now, if we just pause and think about that for a second as it relates to DeFi, and if you are a UK-based DeFi company, there are two challenges there that require some consideration. The first is that by the very nature of a decentralized project, at least most of the way in which most of the projects are currently structured today, there is no center. There's no central point. That's the very nature of decentralization. And that's why we can establish mechanical trust and extrapolate all of the other values that create the attractiveness of these models. So by the very essence of the structure, the construct of a decentralized autonomous organization or a DeFi project, trying to then flip that into an entity where there is a legal body is relatively tough. So, that bears some thinking about and is kind of in counterance with MiCA, at least proposed MiCA as it's laid out today. But furthermore, and this is where we think that there is a good deal of education that's required, if you're a decentralized finance project based in the UK, where I know many of your listeners are based, you may think that you fall out of scope. And indeed, if you don't want to trade with anybody within the EEA, either an individual or an entity, then you probably don't need to pay attention to it. But as we know, with most of the DeFi applications that are spinning up on a regular basis, and the very successful applications that have been operational now for many, many months, we are not bound within our industry by the constraints of geographical boundaries in the typical sense. And therefore, the audience tends to be global. So a project based in the UK, very naturally, will probably be reaching to individuals and to organizations who are based within the EEA catchment area of 30 countries. And therefore, naturally, you will, as an unintended consequence, need to understand MiCA because you'll be drawn into it. So there are just two thoughts from my perspective. I can see Arnab nodding away, and he's a practitioner in this space. So me as a representative of nearly 170 members within INATBA, probably I have a helicopter view, whereas Arnab has a slightly more pointed view. So Ian, back to you, because I'm sure I can see Arnab smiling and nodding away. Maybe he wants to come in and elaborate on a couple of these points.
Yeah, thanks, Mark. And if I could hand over to you, Arnab, and since this regulation was announced a few weeks ago, do you think, from your experience, the industry has fully understood the implications and what resources companies and startups and builders of DeFi projects need to understand and how it affects them, for example?
Yes, I think Mark rightly, I would say, wrapped up on the main territorial implications of MiCA, which is very crucial, because you cannot say you can avoid this MiCA scope because you're sitting in UK or somewhere else. And the same is, if you remember the GDPR, the discussion that we did, I think, not long back, the GDPR had a very extraterritorial application, right? Even if you're sitting in India and trying to, store some data of a European citizen, you fall under the GDPR scope. The same is what the MiCA is. It has an extraterritorial scope, and people need to be, mostly the companies that are working in this space, need to be aware of. And one of the most crucial aspects, I would say, what a lot of DeFis are not really I would say, taking care of here is the stablecoin matters and how the MiCA is trying to regulate that, because a lot of DeFi products are being fueled by stablecoins like DAI or Tether or those kind of structures. And this will come under heavy regulatory scrutiny right now with the current draft of MiCA if it's published like this way. That means all this DeFi application that is relying on those stable coins, it can be asset reference tokens or it can be an e-money token, automatically you are attracting certain regulatory obligations and burden on your place. The second very interesting aspect over here, which we need to discuss, is the decentralized exchanges that we see, Uniswap and those kind of platforms that grew in quite some, I would say, market participants' view. These exchanges are somehow not excluded under the current MiCA structure. It can go into much more nitty-gritty details, but if you see the decentralized exchanges by per se is not excluded from MiCA, so that means those operators of decentralized exchanges has some kind of obligation. That means this obligation will bring the users and the other market participants also in some obligation requirements. So for DeFi, it's very much crucial that they follow at this point of time the MiCA in the current draft, and they also use the opportunity that we have right now till the time this draft becomes a published law. And we share all our concerns and all our, I would say, points with the regulators, with the legislatures right now, and we try to address it, because once we lose this momentum and once this window of opportunity goes away, there will be very little thing that we can do for this industry.
Thanks, Arnab. And that's an interesting point you raised with regards to decentralized exchanges, and you mentioned Uniswap. So, to take that a bit further, Mark, we know, and as you've mentioned, MiCA touches on the centralized market participants, but from the perspective of DeFi, what are the key functions that you think would be deemed equivalent to regulated central functions? You can discuss such service providers and custodians, clearing houses, brokers, etc.
Yeah, thanks, Ian. So at the moment, in its current draft, MiCA classifies crypto asset service providers as follows, and the list is kind of inclusive of these. So it refers to services that deal with custody, administration of crypto assets on behalf of third parties, any operation of a trading platform for crypto assets, which we just spoke about, the exchange of crypto assets for fiat currency that's legal tender, or the exchange of crypto assets for other crypto assets. So, not currency that's legal tender, but other crypto assets. The execution of orders for crypto assets on behalf of third parties. So if you're helping place orders, or the placing of crypto assets, the issuance of crypto assets. And issuers are dealt with separately as well, which I'll come on to in a second. Or the reception and transmission of orders for crypto assets on behalf of third parties. And vitally, the final point that is addressed under the description of crypto asset service providers are those providing advice on crypto assets. So what we said at the top of the conversation is, in relation to MiCA, it's very, very broad and all-encompassing, and there could be unintended consequences in these very broad definitions of service providers that pulls unknowing market participants under the scope of MiCA when it wasn't intended, perhaps, by the Commission in drafting, and the consequence could well be quite detrimental to the smooth functioning of this still very young and innovative market. So I think, the considerations that I would suggest the DeFi market pays attention to is around innovation, is around contributing evidence around the value of the applications that have been built, the purpose of the applications, the innovative process that needs to survive and should not be regulated out of existence, dare I say that, and to help us as INATBA gather that evidence in a logical way and present it as education, as data, and as informative evidence to the Commission, to the Parliament, to the Council, and to the various committees who are at the moment assessing this information. I just want to touch on one point before I hand the floor back to you, Ian, which is just a consideration, because we were talking about crypto asset service providers, but one of the really unique innovations that we've seen blockchain bring to the young technology innovating marketplace has been the ability to raise funds. And an impact of MiCA is to limit the ability of projects to raise funds to a ceiling of 12 million euros. And under 12 million euros, a white paper is sufficient to be able to raise those funds over a period of 12 months. But if you want to go above that ceiling of 1 million euros over a 12-month period, then you need to go through a whole raft of additional compliance, issue a prospectus, and provide a great deal of regulatory information that demonstrates compliance. And one of the challenges that we think that presents to the industry is not only some pressure on a very innovative model to fund in a new and quite forward-looking way projects that have got a lot of technical merit, but it also creates a little bit of a friction point and a point of counterance whereby there is, within the traditional channels established through regulation, an upper ceiling of 8 million euros that is available to market participants who are not raising either for or using blockchain projects. And therefore, we think perhaps one of the objectives and unintended outcome of this proposed regulation is that there has been a little bit of disparity between technologies. It's not technology neutral, because where there is a limit of €1 million over a 12-month period for projects that are focused on blockchain, whereas for other projects in traditional markets, that ceiling is 8 million before additional compliance comes in. We see the gap there in equal treatment as being quite large, and we think that could have quite an inhibiting factor on the success of projects, their ability to raise capital. And as we know, in young and in innovative industries, often access to capital is one of the big barriers towards innovation. And we fear that as we look at this through a European lens, that might create a lower level of appeal to innovators to come and base themselves in and around Europe, which conversely will mean that Europeans lose access to young innovators, young companies that are innovating, and therefore creating a competitive edge. So a few thoughts there for you, Ian, at which point I hand the floor back to you.
Thank you for that, Mark. And there's some good, really interesting points in there. And to touch on the capital raising, that's one of the many benefits that underlying blockchains and the crypto industry in general brings. And the good work that you're doing at INATBA to reach out to the community to come and talk to you, so you can balance the regulation and have that discussion to make the bridge between the private and the public sector. So sort of moving on to Arnab and take the conversation a bit further, how is it supposed that end users or even the software developers will be identified if deemed to be breaking the law or contravening this proposed regulation? Could we start seeing owners of GitHub repositories, for example, come into the firing line and under these proposed regulations?
Yes, I think when Mark read out the definition of crypto as a service provider, you saw it's quite inclusive and it's very overarching provision, right? And the way how it has been structured, like any kind of services, if I put like this way, because there are very few services I can see falls out of the scope. So I would say 98% services are already covered under the definition. So that means you cannot come under the curtain of saying, hey, I just developed a code and nothing to do with that, right? And that argument was valid for quite some time, but somehow I really felt that with the current draft of MiCA, that argument may not be that much, I would say, valid. Also, one interesting aspect I would like to highlight here, Ian, is European Commission has taken a very bold and very courageous stage. Like, this is something in the history of legislative process in Europe, we have not seen it that many times, where for the first time a regulation has been directly proposed before a directive has been proposed from the Commission. And what is the impact is the moment a regulation comes into place, all the member states of the European Union will be bound to follow that. Whereas in the directive case, every member state can create their own structures and adopt in their own laws. But this is quite different in MiCA. In MiCA, that means the moment the regulation comes into applicability or in enforcement, all the member states and other signatory states will have to accept that as it is. That means that brings one side a very positive aspect, that if you are regulated in one member state, you get the passporting to other member state and can provide services to the other member state, which is currently not possible. If you see all the vast regime and everything in Europe is very fragmented. But on the other side, that brings that once the MiCA comes into play, this draft will be there. So right now, I think it's much more important, and this using this time much more, as Mark mentioned, provide the opportunities to mention to the European Commission or the regulators and the legislatures about the risks and how we are mitigating the risks. Because ultimately what the European Commission's main role is to provide stability, provide investor protection, and to provide a market, I would say, rights to each and every parties. And if you can show that the market participants have proper mechanisms in place and the risks are being mitigated adequately, I think a lot of provisions can be simplified, and a lot of this kind of definitions, and that's where much more work right now is there, is to narrow the definition part as much as possible So the definition is only covering those services which really brings a higher market risk, and not every services that we're talking of. And this is our opportunity right now, which we have to do as an industry.
Yes, we do as an industry, and please do, listeners, reach out to INATBA if you're concerned about your DeFi project and how it falls into this. And so I would like to move the conversation on to KYC and FATF and the travel. We can't have a discussion around regulation without touching on this. And so, really, the challenge for a decentralized exchange, how would it consider dealing with such issues as the travel rule and customer due diligence, Marc?
Yeah, big questions, Ian. So we're calling for greater clarity and really looking to the consultative process going through Parliament at the moment to give us some input on that, because it's less clear. What we do know right now is that the travel rule, MiFID II, they're really well constructed pieces of regulation and legislations, but the way in which they are perhaps being reversed into our industry is not always appropriate or easy to comply with. So one of the things that we're asking when we do address with the policymakers, the regulators, the politicians, and the members of states in the various councils, is that they provide a bit more. They provide a bit more focus to the industry that we're all trying to build here. Give us the opportunity to be compliant, because for certain, what we want to make sure we establish as the industry is legal certainty. Not least of which because it gives us as business owners greater operational security, but also because through having those good processes in place, we create a more secure environment for consumers, which we're all as an industry really focused on trying to create and ensure exists. So, oftentimes there is, I think, a misplaced view that as a young industry, the blockchain, the DLT, the crypto asset industry is resistant to regulation. I think, most oftentimes that's easy to misrepresent the industry in that way, because we are innovative, because we're pushing the boundaries. But I think there's a deal of what I would call grown up or well-educated, well-informed thinking right now, which doesn't get surfaced often enough, which is that once you prise under the veneer of these organizations and you talk to the legal councils where they exist, you talk to the business owners, you talk to the chief operating officers and the C-suite, there is an absolute recognition that robust tools around KYC, AML, compliance with regulation, and the provision of security to consumers are absolute musts. Otherwise, the industry is not going to grow. I think the question that we're all trying to grapple with at the moment is what is the best way to bring these regulations in such that they play well with each other. And an example of that would be how MiFID II works nicely with MiCA, for example, and dovetails into the proposed pilot regime that Arnab mentioned earlier. And those interaction points are points that we really are pushing to explore. And, just some examples of that mean that larger organizations under MiCA who might already qualify, larger organizations under MiFID II might already be having their crypto asset focused organizations catered for or registered as being compliant with the various regulators and therefore fall outside of MiCA, yet smaller players for whom MiCA is net new might need to wait some time before their national bodies who are responsible for enforcing MiCA grant them a license to operate. And that disparity in the application of these regulations causes us a bit of concern. So I think it's broader than just KYC and AML. It's to do with the application of all of the regulations and to make sure that there is a level playing field for all players. So, hopefully that gives you a little bit of insight into some of our thinking there, but certainly the application of regulations are top of our mind, because the creation of them is one thing, but then the enforcement of them, to your point earlier, Ian, is an entirely different affair. And what we want to make sure is that when we get to the point of enforcement, which with MiCA, because it is a regulation, as soon as it is accepted through Parliament, it becomes immediately enforceable, that we don't establish a two-speed environment where there is greater advantage for those companies who are already deemed compliant under another vehicle, such as MiFID II, for example, whereas those under MiCA, because it's new, are having to wait for a delayed period and therefore are being negatively impacted. So we're really calling for a level playing field across all of the regulatory tools and pieces of legislation that exist, and in trying to ensure that, again, we deliver that evidence that supports the reason why this is important on behalf of our industry.
Thank you, Mark. And just to follow on from that, I'm going to ask a couple of final questions here for Arnab. Firstly, around the timeline. So what would the industry be looking at in terms of when they need to get ready for this? And also in terms of the concept of future-proofing this particular new proposed regulation. Do you, in your experience, Arnab, as a practitioner in the industry, has the Commission fully understood the future innovations and what perhaps is around the corner?
Yes, I think that timeline-wise, Mark will be the best person because he is directly dealing with them in the Brussels, sitting in Brussels in this COVID time. So kudos to Mark for this effort. I think I will pass on the question for the timeline to him. But where I see the appreciation of the European Commission to understand what is the impact of this law, they definitely, I would say, understand what is the impact, because from the last year or the March this year when the consultation process started, we saw that the Commission is coming out and asking the industry number of times, various feedbacks. They are also coming and talking to the industry. And this was quite elaborate process, I would say. But on one side, we need to also appreciate that there is some kind of political will, which we can see in this last couple of months, that there is a political will maybe triggered by Libra or something else. We cannot say that because it's not a part of the documentation. But you see there is a political will to push this kind of legislation, and somewhere maybe a market stability or consumer protection and those kind of, I would say, sovereign functions are being triggered here. But as a market, as an industry participant for us, for be it DeFi, be it centralized finances, be it any kind of market participants in the blockchain space, I think we have now one good opportunity to show to the regulators in terms of the opportunity cost for the regulators, in terms of the risk that they are dealing with or they're talking here, and how it can be mitigated. Because as an industry, I think we are not in a stand that we don't want any regulation, as Mark mentioned, right? This is not a stand of the industry, and this is cannot be a stand of the industry in this situation where the market is growing so exponentially. So definitely regulation need to be there, and it's good for the industry, it's good for the market participants. But now the question comes is how this regulation need to be adopted and how it need to be implemented. Because if it crosses the borderline and becomes an over-regulation, it will completely kill the industry in one strike, and that will not be ideal for anybody in the space, be it regulators, be it I would say the economy, be it the market participants. So here we are in a very delicate scenarios, how we tackle the situation, because it's not the case that there are a lot of scam activities are happening, or there are a lot of fallouts are happening every day. The Commission can come and say, hey, you are creating a mayhem in the situation and everything is falling out apart. It's not that. But on the other side, we are also in a very delicate scenarios where a lot of big incumbents are now trying to enter into the space, and they have their own regulatory framework, and how that to be adjusted over here is a matter of, I would say, concern, and this need to be triggered out properly here.
Thanks, Arnab. And it's key to strike that balance, isn't it, from the good work that you're doing in Brussels to ensure we have a fair, balanced and proportional approach to regulating this new industry. And just if I could hand back to you, Mark, for the final question, just to talk us around when we can expect this regulation to come into effect.
Yeah, thanks, Ian. So time-wise, it's always very hard to predict. We do know that there are a number of parties within Parliament who are pushing, who are pushing for this regulation to go through very, very rapidly. And by very rapidly, our intelligence suggested that they wouldn't have been dissatisfied if the process had been completed during early Q1 next year. It's far more likely that the process is going to take somewhere up to 12, maybe 24 months, because there is a rigorous process through Parliament involving debate in councils, involving debate by member states within different committees, and then finally going through the trilogues, which is where the Parliament and the MEPs get to vote and get to have a view on things. So I don't want to mislead people by saying it's just a few months. But look, the reality is this regulation will fall into place sometime, we guess, within the next 12 to 24 months. And because it's regulation, the moment that it reaches its final draft and becomes enacted, it comes into play in those 30 countries with immediate effect. The only point at which there is a review currently, as laid out in the documentation from the Commission, is 36 months from the month of enactment, when there will be a study, a report provided that looks at how this regulation has, what impact it's had. So 3 years potentially after the regulation has been brought into play across 30 countries, will there be evidence gathered that will be reviewed? And therefore, whilst we can't say that the regulation is coming in tomorrow, because that's not true, it will be sometime within 12 to 24 months, which probably feels like a long time away to most of your listeners. The reality is that the discussions about what will be in scope and out of scope are happening now. In fact, they've been happening since October. So we would urge, from a timeline perspective, all of your members to pay attention, because if you're based in the UK, this will impact you. If you want to trade outside of the UK in any one of these 30 countries, or if you have aspirations to expand your project into Europe, this will impact you. And even if it doesn't, you need to have a voice, because this is the world's largest block of countries, 30 countries, creating for the first time ever harmonized regulation that governs crypto asset issuance and crypto asset services. So if you really want to be involved in this industry, to have your share of voice, we urge you to come join us, submit your evidence, and leverage our platform so that we can represent your voice and your evidence into these regulators and try as best as we can to make sure that innovation is at the heart of this proposed regulation. So in a little more than the timeline that you asked for, and I hope you don't mind me putting out the rallying call, but it's my job.
Not at all. And again, this has been a fascinating discussion, but folks, this is coming. It's binding on the whole of the EA, as Mark said, 30 countries, and it's coming soon. A year, 2 years will fly by. But I wanted to conclude this discussion. It's been highly interesting, and thank you so much for your time, Marc and Arnab. Well, where can our listeners contact you?
So you could go to inatba.org, that's INATBA.org, or you can just search using your favorite search engine for INATBA and the MiCA task force, that's MiCA, and you should be able to get to the tab to come join us, and you have all our contact details there, where you'll be able to find the exemplary and very valued Arnab leading our finance work group.
Thank you. And if listeners wanted to contact you, Arnab, is there a particular place they can find you?
As Mark mentioned, I think we are here for the MiCA and the regulations. So I think it's the best way to join the task force. And also, I think it's one of the very interesting opportunity that for any industry, they can be a part of this initiative without being an active member or a paid member. So that opens an opportunity for anybody who has any interest into the space. Please join us. Please share your thoughts. And we would try to make our best and how we can represent the industry as the best possible way.
Well, that brings us to the end of this discussion. Thank you so much, guys. I wish you well and good luck with the great work you do there.